Now that we have laid out the characteristics of an FHA loan, we can look at borrower qualification requirements. In order to qualify for an FHA loan, a borrower first must demonstrate creditworthiness. Let's break down this requirement a little further. In addition to transferring risk and accountability to more financially qualified lenders, the FHA also has taken steps to tighten its underwriting guidelines by limiting its program availability to borrowers who have demonstrated, through credit scoring, that they are more capable of making the payment. This in turn will put much less pressure on the FHA insurance fund. Let's take a closer look at their efforts. Beginning with FHA case numbers after October 4th, 2010, the FHA adopted minimum credit scores and loan-to-value ratios based on those scores. The Federal Housing Administration implemented the following limitations. Borrowers with a minimum decision credit score at or above 580 are eligible for maximum financing. Borrowers with a minimum decision credit score between 500 and 579 are limited to 90% LTV. Borrowers with a minimum decision credit score of less than 500 are not eligible for FHA-insured mortgage financing. And finally, borrowers with a non-traditional credit history or insufficient credit are eligible for maximum financing, but they must meet the underwriting guidance that can be found in HUD 4155 14.C.3. Additionally, in order to qualify for an FHA loan, a borrower must show satisfactory mortgage payment to income ratio. To determine this ratio, you need to add up the total mortgage payment, which consists of the principal and interest, escrow deposits for taxes, hazard insurance, mortgage insurance premium, and homeowner's dues. Then you will take that amount and divide it by the gross monthly income. The maximum ratio to qualify is 31%. Finally, in order to qualify for an FHA mortgage, the borrower must demonstrate a satisfactory housing cost and recurring debt ratio. To calculate this ratio, add up the total mortgage payment and all recurring monthly revolving and installment debt. This would include car loans, personal loans, student loans, credit cards, etc. Then you take that amount and divide it by the gross monthly income. The maximum or back-end ratio to qualify is a debt to income of 43%. Please note that the FHA does allow higher ratios for borrowers with scores of 580 or higher scores that have compensating factors. Those ratios range from 37 to 47% with one compensating factor to 40 to 50% with two compensating factors. And if there is no debt but the borrower has established credit, the FHA allows for a 40 to 40%.